Shafudah says government has managed to accumulate $463 million into a sinking fund over the past several financial years to manage its $750 million Eurobond. The aim is to add another $162 million or 3 billion Namibia dollars to that amount before maturity of the bond, leaving a balance of about 2.3 billion Namibia dollars. Shafudah says the balance will be refinanced through the domestic market, noting that given prevailing interest rate levels, government believes this is most optimal, considering sufficient liquidity levels and the demonstrated appetite for government securities.
Nonetheless, going forward, we aim to carefully balance the annual domestic financing requirements to avoid crowding out the private sector funding. Furthermore, we will employ a combination of funding from multilateral organizations to finance infrastructure projects, as well as exploring potential off-budget financing solutions in partnership with the private sector.
In addition to redeeming the Eurobond, the Finance Minister says government is also making substantial principal repayments to settle the International Monetary Fund's Rapid Financial Instrument, financing it to a tune of $2.3 billion in this financial year and expected final payment of $1.2 billion in the next financial year. Shafudah says government is confident that the envisaged funding approach will stabilize the debt stock over the medium term.
Overall, the total public debt is estimated to moderate from 66% of GDP in 2024-2025 financial year to 62% in 2025-2026 financial year. Furthermore, subsequent to settling these two hard currency obligations, over 80% of our debt stock will be denominated in domestic currency and thus insulated from exchange rate risks. We believe domesticating our debt portfolio will strengthen the domestic capital markets while providing an avenue for deploying domestic capital in the domestic economy.
A detailed borrowing plan for the issuance of domestic securities will be disseminated to market participants over the coming weeks.